Hello and welcome back to the TradeNeon software channel. And with that, also welcome back to our swing trading market analysis video series, where we have a look at a market that is currently fundamentally interesting and analyze it within Futures Insights, which is our futures analysis platform. If you don't know me yet, my name is Simon Reichert. I'm part of the TradeNeon Academy team. And in this video, I want to analyze together with you the ZL future, which is the future traded on soybean oil at the Seaboard exchange. And as always, before we head into analyzing, our disclaimer that trading in derivatives or securities in general involves significant risk, and that also this video shall not serve as investment advice and or intermediation according to the KWG. And with that out of the way, I would say let's jump right into analyzing, starting off with the dry powder indicators for the managed money side as usual. And what we can see immediately is that we have a long open interest positioning that is definitely quite interesting because it's far above average standards. Whereas the short open interest is, well, quite in its usual state, or even a little bit below average. That is definitely quite interesting for us because what we can take from this picture is that the managed money side does not have, well, as much more dry powder to fuel an ongoing long trend because they are approaching extreme long positioning in the market. Obviously, this would be even more extreme if, for example, the current positioning would be at its absolute most extreme positioning ever, because in that case, we would simply have to ask ourselves if basically all of the long institution, or if basically all of the institutions are already long engaged, which institution is supposed to, well, build even more long open interest. But even currently, what we can also see is that we have a look at the OBOS indicator, which relates the current positioning to other variables such as the total open interest, as well as involved market participants at the moment, and also the price in comparison to the look-back period. Is that the OBS indicator essentially tells us that with its current signal from the most recent COT report, we definitely have a positioning in the market that is more interesting fundamentally for a short trade. Next up, if we have a look at the dry powder indicators for our commercial market participants that basically use this underlying good for their commercial operations. So they use it for their production, or they sell this underlying good as a result of basically harvesting it or farming it. That these market participants are buying this underlying good extremely much, and they are also selling it extremely much, which is a bit contradictory because normally we would see that on the one side, for example, the long open interest is quite high, or is that above average, whereas the other side would in that case be normally below average. But in this case, we can see that this is not the case, and that is usually because of term structure reasons, which we will have a look at later. Concerning trading direction, we can, however, not really gain that much valuable information from this chart. So let's head over to our OBOS indicator, which again relates this current image that we get from the COT report to these other variables. And in that case, we can see that the current positioning is definitely more interesting for a potential short trade, which is why we get 85% intensity short signal. So in this case, also again from the PMPUs, definitely fundamentally more interesting for the short direction. Next up, let's have a look at the open interest, where we can see that the market is currently still quite liquid, so we won't have any problems getting in and out of the market, which is especially relevant if we are trading with options, which is obviously good for us. And we can already see that the open interest is declining just a little bit of the last couple of weeks. So we're gonna have a look in a second whether it is because long positions in the market were recently closed. And that is something we can have a look at with our flow cube, which basically tells us what happens to existing positions in the market and our new positions coming in. And there we can see that we had a range phase here for a couple of weeks now, where we had a weak short covering. So short positions were being closed. Week before we had a strong short building. So in a quite extreme amount, short positions were being opened. Week before we had a strong long building. So the same, but for long positions. Week before we had a weak long building. Week before we had a strong long with liquidation, which means that long positions were being closed. Week before we had a week long liquidation, so not too much information we can gain from the flow cube currently. One information that we can take from our seasonals chart is that we don't have to worry about any upcoming seasons in the ZL future until the 23rd of September, so we don't have to keep an eye on that for quite some time in the future. And lastly, let's have a look at the term structure, which is what I've already briefly talked about earlier in this video, is that we currently have a backwardation, which simply means that future contracts with expiry dates closer to the current dates become more pricey, which is definitely something that is, well, not normal, because usually it would be the other way around, that future contracts with expiry dates further into the future become more pricey, as for example, storaging costs for this underlying good are being priced in. In this case, it's a bit different due to supply shortages, and in this case, market participants are being comfortable taking the higher price or paying a higher price in order to basically increase their chances of still obtaining this underlying good, which is also the reason why we had there's a bit uncommon positioning with our PMPUs, because in that case the price is quite high at the moment, which is why the short sellers or the PMPUs that sell this product for their commercial operations definitely like to sell this product because of the high price, and at the same time the commercial market participants that require this underlying good for their operations still have to basically pay the premium in order to be able to still run their business. And one thing we certainly want to refrain from doing is doing any short trades during the time frame where a backwardation is building up, because in that time frame usually prices are rising with quite high intensity. But what we saw just recently, that we had basically a top in this backwardation phase, so which means that the backwardation reached its most intense state, and a couple of weeks later, which is roughly 1 month later, we saw a lower high, which already signals, which is already signaling that the backwardation is basically relaxing a little bit, and that we can also look for short trades within the market, because at the moment especially we are seeing more short signals. I would just be a bit cautious if we see any more long signals in that situation. I would definitely have a look at my trade and reevaluate if I want to keep this position or not. And with that, we are again approaching the end of this video. I certainly hope this video was helpful for you and that you can take 1 or 2 information for you and for your own trading. If you have any questions, recommendations, or things you want to tell us, please feel free to drop us a comment and we'll get back to you as soon as possible. With that being said, I thank you very much for watching and see you again next time.